Oh, wait, hold on. Bees, give me a second. So you mean to tell me is somebody going from 650 something credit score, if they follow what you're saying, based on that FICO pie, they can go from 650 to something like this? And so the only thing that they're missing out on in order to do that is freedom. Hey, what's going on, everybody? My name is Drew Romeo with Freedom Nation, and I have the best guest I think we've been waiting for a long time to hear from, and is my friend, the one and only Mr. Beez. And what I want to say a few things about Mr. Beez is that we met a few years back, about around 2017, and he has done nothing but great work. He owns about 1 million plus lines of credit, business lines of credit. He owns about 7+ businesses, which he owns and operates himself with a massive teams of VAs, which we'll get into in a little bit. He is also the proud owner of the Business Builders Academy, which we'll talk a little bit more about towards the end. And he's a master at when it comes to credit and personal credit and business credit. And we're gonna break down a few of those things today. All right. So Beez, what's going on, man? Thanks for coming on the show. I appreciate you.
Hey man, thank you for having me, man. I appreciate you, man. And I've been waiting for a while to get on the show with you.
I appreciate you, man. So, a few things I wanted to touch on first, guys. We're going to be talking about all things personal finance and the difference between the FICO score and the vantage score, and what is Credit Karma, should you use it, should you not, and how to go from a 650 to 800 plus credit score. What does it really take, right? Because it's more than just saying paying your bills, right? It's more than just someone saying go ahead and get a new line of credit. There's a lot of things that come into play, and we're going to break that down. But here's a few stats for you guys. I'm going to go ahead and share my screen so you guys can see it. Okay, so if we go on to Google and you guys search this up, and this is according to Dave Ramsey. I know a lot of people know Dave Ramsey, right? So he has a lot of good things to say, but when it comes to debt, that's his number one enemy, right? And we're talking about consumer debt in particular, okay? So a recent study that he's done shows that 80% of Americans are caught up in the chains of debt. Now, here's what that looks like visually. Walking down the street, 10 people walks by, you count out 8 people, that is 8 people that's bound by the shackles of debt. And that's insane to me, right? Another study shows down here that according to Experian, which is one of the major credit bureaus that we'll be talking about today, one of the major 3, right? The big 3 is, according to Experian's 2019 consumer debt study, a total consumer debt in the US is $14.1 trillion. That's astronomical, right? With Americans carrying an average debt of $90,460, and that's almost $100K, not in the bank, but this is literally money owed. And so for us, we talk about debt a lot in the world of business, and B, as you know this as well, like business debt is very different from consumer debt, right? And that's one of the things that we want to talk about today. So before we dive into that, now we have some facts about that. Let us know a little bit about you, about your background, a little bit about how you came into this world, owning this many businesses, having millions in lines of credit, and you're just doing a lot of things, man. I don't know one thing that you're not doing, not to mention real estate and Airbnb businesses, right?
The funny thing is, I always say this quote, most people know the quote, a jack of all trades is a master of none. Yeah. But the continuation of that, now I don't know if this is the original quote or not, or if someone added to it, but the continuation is, but oftentimes better than a master of one, right? And people are afraid to do multiple things, because you'll hear a lot of people always saying, hey, you just got to focus on one thing first, or you got to focus on one thing, right? And I agree with that, but the last part is the key. Focus on one thing first, right? Because you need to grow something, especially when it comes to a business. You need to grow that business first, scale yourself up out of the business through process, systems, and people. Yeah. And then you're no longer self-employed, but you're a business owner, right? Exactly. And this business can become a little bit autonomous. It's cash flowing for you, and then it's helping to fund your other endeavors. And honestly, that's all I did. I'm gonna be honest. I was able to get one of my first main businesses to 7 figures without running any ads, without really focusing on social media too much. Mm-hmm. And it was all because I was networking, different partnerships I was making. I was hitting every trade show, everything that was out there, conference, the Grant Cardone's 10X conference, anything, right? And when I'm there, I would meet people and get business cards and talk and follow up, and then deals would come from it. But after a while, I was like, oh, I wanted to get into some other things, And I was like, well, how do I fund those things? Because you don't want to commingle funds too much between companies.
Yeah.
So then that's when I started figuring credit as an option. I never focused on credit before. I was like, I just, I'm making cash. Let me just use that cash for what I need to use it for. But I
Now,
remember,
was your background with? And again, I know we come like, let's see if your background is the same. I grew up knowing that credit was the enemy. Like it's
yeah,
horrible, bad.
yeah,
Don't mess with it. Don't touch it. Don't do anything with it. Don't, you know what I mean? Is that similar or is it different?
for sure. So I'm Jamaican. So coming from a Caribbean background, man, that's all that I heard is credit is bad. Don't, and nothing more than that. No,
Right.
no reason of why it's bad. Just
Yeah.
that it's bad and stay away from it, right?
Right.
And I messed up my credit in college because I was like, oh, I walked into the student union, they talking about, oh, free credit card. I was like, okay. And then I ran it up with no thought of how I was going to pay it off. You know what I mean? And that's
Exactly.
why you see that stat that you showed earlier, because what people don't realize is that the wealthy in America embrace debt,
Correct.
right? While the poor, they fear debt, right?
Mm-hmm.
But for some reason, they still run it up, right? So the key is there's good debt and there's bad debt, right? If you have debt where you're using someone else's money, other people's money, to make money, then that's good debt. This is
Yeah.
why Apple has almost 200 billion in cash reserves, yet they still take out loans.
Sheesh.
They don't need the loans, but
Right.
they know, hey, let that cash sit there, let
Yeah.
it invest and do some things that's just making more money for it, and
Yeah.
then I'll use someone else's money for the next endeavor and such.
Yeah, and it's because obviously they know that they can make that money back, right? Because they've been in business for so long, they know how to properly use that debt, that loan, where it can produce, not just put the loan in and anything willy nilly and not have anything come back for it to be paid, right? So I think
Yep.
that's really one of the ways to use debt wisely, and you mentioned that. So, and that's business debt, which we know that how to use effectively. Now, going into personal debt, someone who's coming in is like, yo, I'm having trouble keeping track. People are telling me things, that I'm not even sure if the truth. Someone told me to go on Credit Karma, and I'll tell you my personal story real quick. It's just like, 600 and I don't know, 650, 660s credit score, struggling for a while, and then I'm like trying to figure it out. I did some research online, and again, even had mentioned some stuff to you as well, and you gave me some pointers. Like it wasn't just paying your debts on time or paying your bills on time. It was a mixture. It was a pie, so to speak, where everything's kind of divided and look at you from all angles, right? Are you paying on time? The credit mix that you have, the types of loans that you have, who are you borrowing from, and like things of that nature that I did not know. But once I got control of that, it really allowed my credit score to rocket literally in a year, and I was
Yeah.
able to really blast through a lot of ceilings that I didn't even know existed. So tell us a little bit more about that breakdown.
Yeah, so the thing is, most people figure, oh, it's just about the credit score, right?
Hmm.
But your credit score don't mean what people think it really means, and
Right.
it could be two people that have the same credit score, 750 or something, right?
Yeah. Yeah.
And one person get denied for a specific loan, and the other person to get approved for it, right?
Hmm.
And it's because of their credit mix, their credit profile, right? So, yes, if you have a strong credit mix, it's going to affect your credit score to make it stronger.
Yeah.
But it's about the mix more importantly, especially when lenders are doing their underwriting, right?
Hmm.
So it's made up by these elements. The most important element is, do you pay on time, right?
Okay.
That is the most important element. It makes up 35% of your score, right? So are you paying on time? Do you have any late payments, things like that? The next most important thing, which makes up 30% of your score, is your utilization, right? So the amounts owed, right? Your utilization is, okay, you got 4 cards. One of them is 1,000, one of them is 5,000, one of them is 10,000. Well, that's a total of 15,000, right? And if you're using more than a certain amount of that 15,000, it
Yeah.
could be bad for your score. Now, here's the trick. This is a little gold nugget for you, a little gem I got to drop for people.
Let's go.
That most people hear that magic number of 30%. Keep your
Yeah.
utilization under 30%,
Yep.
right? And technically that's true because anything above 30% is going to be detrimental to your score. Anything under 30% won't have an effect on your score.
Right.
But we want to have a positive effect, right?
Correct.
So what you need to do is have it under 10%, right? And the
Mm.
actual magic range is about 2 to 6%, right?
And
So as
that's
long as you're
usage, right? Like credit, like usage.
your utilization, yep, your
Okay.
usage, utilization, right? That's how much you're actually spending of your credit and that you owe to be paid back. And if you're
Okay.
carrying over that debt each month, not only are you getting charged interest, but it's also negatively affecting your score,
So let's
right?
let's let's recap a bit so that way we can like break this down in layman's terms. So let's say I have I don't know a $10,000, right?
Mhm.
Of credit, right? You're saying that what normally people would say would be if I want nothing to affect my credit, like if I don't get a positive effect or a down effect, it's 30%, correct?
Under 30%. Yep.
So keep it under 30%. So as long as I spend under $3,000 and under, I'm good,
Yep. Yep.
right? But it
Yep.
doesn't affect me positively, nor does it affect me negatively.
Exactly.
But if I wanted to really have it affect me positively, like help my score go up, I'd have to keep it $1,000 or less, which
Yep.
is that 10%. But the
Exactly.
magic number you're saying is between 2 to 6%.
To the 6%. You
So
got it.
that's 200 to $600, and keep it right there if you wanted to make sure that it can maintain that positive effect, like for sure, which is great, right?
Exactly.
Awesome,
Exactly.
awesome. All
I,
right.
I give one more quick gem before we move on to the other areas
Yeah.
within your credit mix, right? There's two dates that people need to be aware of when it comes to like your credit cards, for example.
Yeah.
One is the due date, right? So your
Mm-hmm.
due date is when you are obligated to pay the financial institution, or otherwise you will get a late fee and that type of stuff.
Mm-hmm.
But the other is your statement date. A lot of times people just figure, oh, that's the day they send me my statement. No, the statement date is actually the day that they report it to the credit bureaus, right? So let's say
Mm-hmm.
I owe that same $10,000 model that you mentioned, right?
Yeah.
Let's say I ran up a bag and I spent $7,000, and that's 70% of my utilization, right?
Yeah. Yeah.
Then I paid it on the 10th. That's my due date, right?
Mm-hmm. Mm-hmm.
And then I paid everything. I brought it all the way down to zero, or I kept it in the magic 2%, 2 to 6%
Right.
range.
Right.
Then the next day, I'm like, okay, now they were, I already paid it. I'm good. Let me run up another bag. I'm gonna spend another $5,000. 2 days later, the statement date hits. They report it to the credit bureau. It looks like you didn't pay anything. The company's fine. You met your obligation to pay for the month, but
Right.
your credit score is going to look bad because now you're at 50% when you're like, damn, but I just paid it all off. But no,
Right.
you paid it off and then ran it up before it reported.
So the due date or the statement date and the due date are the two dates you mentioned, right?
Yep,
Paying it before the statement date is what you're saying is best.
is what's important
Is
to
what's
you.
important
To you,
because that is what gets reported. It takes a snapshot essentially of your whatever you owe and
hmm
sends it over to the bureau by that time. And
hmm
then but your due date is when it's the last and final date that you have to pay before fees are incurred and things of that nature, right?
that
All
date
right.
is important to them.
To them.
That's the day where they're like, hey, you need to pay me.
All right.
You know.
I
But
got you.
continuing on along the mix,
Yeah.
so uh, late payments and amount owed is that payment history. That's 35%.
Mm-hmm.
Your utilization is that 30%. Then the length of your credit history makes up 15%. So if you open a bunch of new cards, it averages down and lowers your age of your credit. I could have one loan that's 20 years old, and I'm like, yeah, I got 20 years age of credit. But then I open up 10 new ones this year, and it averaged me down all the way to less than 5 years of credit. And
Mm.
if you're less than 5 years of credit, that's a negative factor that's going
Yeah.
to affect your score, right? So length of credit history is important and how you manipulate that, right?
Got you.
And then the other things are your credit mix. You got like a mortgage and a auto loan, and so and at least well, you want at least 10 accounts, period. But sometimes you would say at least maybe 10 types of cards, right? But you could have different things. At least 10 trade lines, 10
Mm-hmm.
types of accounts on your profile is good. But you want to have more than that, right? Um, loans, personal loans, all that type of stuff, right? And then new credit is the other 10%. New credit is, oh, I just applied for a new credit card. Now I got a hard inquiry on my report. So now bureaus will look at that. Bureaus and lenders will look at that hard inquiry and say, okay, in the last 6 months, you got 6 new inquiries. Anything over 5, truthfully, anything over 3 can be detrimental to you, right?
Gotcha.
That's why some people in credit repair and such, like myself, we know how to remove those inquiries.
Ah. Ah.
You know, but even removing those inquiries is only 10%
Right.
of your. People focus on those inquiries too much. The most important thing is make sure you got no late payments. That's the most important thing.
Because it's the biggest piece of the pie. It's 35%. That's humongous.
Exactly.
Can't ignore that. Okay. Cool, man. All right, so now you broke down the whole pie, right? About how the whole credit score is calculated, right? From the FICO score. Now, here's one thing that I've come across very much, even in my own credit journey, right? Was that, and for those of you guys who don't know, like we both, we've had our own credit journeys and have done very well and are still in this place now where we're looking back and like, yo, what really was that difference? You really more advanced as far as like personal going into the business credit, which I'm learning from you definitely because, for those guys who don't know, Beez really is, when I talked about the Business Builder Academy, he teaches people how to build businesses and structure them effectively, so that way you are built up for success. How to build trust, how to build, how to really correctly form an LLC. And so these things are things that matter later down the road, and how you're structuring that and stacking them on top of each other and effectively, keeping yourself and your family protected, and then also while building generational wealth, which I think is super important. But with this, I've heard Vantage Score. A lot of people say, yo, get Credit Karma, man. That's all you need and you're good. And for the longest time, I really did believe that. But little did I know that there was a difference between a Vantage Score and a FICO score. Please do me a favor, bro, and break this down.
Exactly. You're on point already, man. So the key is, first of all, Credit Karma. You mentioned Credit Karma.
Yes. Credit
Karma is fine, right? I as much as I don't like it for specific reasons, which I'll explain in a second, I still do like it. It's free. You could at least see 2 of your bureaus, TransUnion and Equifax. You can't see Experian on it, but then you could go register for Experian also, so you see all 3 bureaus, right? The problem with Credit Karma is that it's showing you your Vantage score. So don't go on there to see your Vantage score, and I'll explain what that is in a second. Go on there to see what's happening on credit report. Oh, a new account popped up. Oh, a new inquiry popped up. That wasn't me. Let me call it and get this off. Oh, this happened. Let me correct it. Don't go in there just to focus on your score, because the credit bureaus came together and came up with a new scoring model called the Vantage score, right? So that scoring model is great, whatever, it's fine, it's their model, but lenders don't really use that. You're hard pressed to find a lender that uses the Vantage score. They use your FICO scores, and I say FICO scores plural because there's multiple FICO scores as well, right?
I've heard that. Yes, please explain.
Yep. So one app that I highly recommend for people is MyFICO. You can get the MyFICO app on your phone, or you could go to the myfico.com website. And with MyFICO, yep, that's the one.
All right, perfect.
With MyFICO, it tells you all of your FICO scores, right? Remember I said there's multiple. There's FICO 2, FICO 3, FICO 4, FICO, all the way down to the most newest one is FICO 10, which just came out recently. The other good thing that you need, or the most important thing that you need to know about MyFICO, is that it also shows you not just your FICO score, but your FICO score per particular lender. So if you're getting a car, auto lenders use, and I don't remember the exact numbers, but auto lenders use the FICO score 2, 4, and 8, right? Whereas credit card bureaus use 7 and 9. Mortgage lenders use 6, 7, 8, whatever it may be. I don't remember the exact numbers for each one, but MyFICO will show you that. Not only are they going to show you all of the FICO scores, 2, 3, whatever. Not only are they showing you for each credit bureau, So you see TransUnion, Equifax, and Experian, but they also show you, well, for your auto scores, here's what it is for each bureau. For your mortgage scores, this is what it is for each bureau, and so on and so forth.
Got you, got you. And guys, for you guys who don't know, we're not affiliated with FICO, myfico.com, but we do know that it is a great source. And I learned this also from Beez. He told me about this, and this is something that of course, if you're serious about diving into your personal credit and gaining control of it, like realizing what your true score is, a score that a lot of these lenders kind of go against when they say, okay, this is what your true actual score is, where you're going for a car or trying to buy a car or going for even a home. These are the scores that they're most likely going to be using, not the one that Credit Karma shows you or any of these other free apps will show you. And so you know that there are different models or different pricing areas. Just figure out which one works best for you, and then you can take it from there. But I will say, Credit Karma, if you are just starting out, was a great starting place for me. And like B said, using it for keeping track of, what your outstanding cards look like, your outstanding loans look like. So you have all that snapshot in one spot. And if you focus on paying on time at the statement date or before the statement date, so therefore it will report to the bureaus, which is Equifax, TransUnion, and Experian. Those are the three main bureaus that it's going to report to, and it's going to reflect that you've made some large payments or you've made the payment, and so you have a lower payment reflecting, right, for the next 30 days. And so I think this is a great starting place, especially if it's super free. But if you really want to get down and know exact scores, that's where the MyFICO comes into play. The last thing I'll bring into is you have an account with Navy Federal, right?
Of course.
All right, so Navy Federal has been the bomb for me, and I'll tell you why. Because Navy Federal also offers free FICO score checkups. Like if you go on the app, and I think there's a button when you click on your actual account, you scroll down, it'll let you know what your FICO score is, and I believe it's the FICO 8 or 9 that they show you.
I think it's a 9.
Yeah, right. So that's what I'm saying. So I'm getting there, B. See, I'm getting there, man. And then also,
Since you brought up Navy Federal, I'll give you one quick tip. Another gem I'm going to drop right now, right? Navy Federal, one of the best things about them, there's a lot of things, right? But one of the best things about them is that they allow you to get a credit limit increase or a new card every 91 days. It's called the 91-3 rule. 91 days or equivalent of 3 billing cycles, right? They let you get a credit limit increase or a new card. So every 3 months, request that credit limit increase. Every 3 months. And you'll see that I think the signature rewards, I think it's called, no, their flagship goes up to 80K. Right, their Amex one goes up to 50K, and then their cash rewards goes up to 50K also, I think. Nice. So in no time, if you every 3 months, you just keep going. and sometimes they give these huge increases. You'll jump from, before COVID, they were giving out 25K just to start. Then you get an extra 10 every single time.
That's awesome.
In no time, you're up to the limit.
No, I love it, man. I love it, man. That's a great point to bring in. Other thing I've used too is I have a card with Citibank, and if again, this is another way for you guys to check the actual FICO score. Citibank will also give you the FICO 9 or 8 score as well. So these are just a few ways for you to keep track of exactly what it is that you're spending, where you're at, because I think before you can even know where you're going, you need to know where you're at. What is your score? What's most important is found out what is your FICO score. The Vantage score will be kind of close, but it'll be off though. Vantage score will make you feel a little better. When you go on my, Credit Karma, I'll be like, oh yeah, 700, and it's like, no, it's actually like 670, 680. It's off by a few usually. But if you keep track of both, I think it's going to be good for you. And I think this was one of the reasons why I wanted to make this video, why I wanted to bring Beez on, is because he's so much more experienced when it comes to the world of credit. And him having a credit restoration company, which he doesn't talk much about it, but he does have it, and he's able to help people repair their credit, especially if you're having some issues with it. And so that's why I want to bring him in on the show today to share you guys, because again, like I said, Freedom Nation, the goal here is to make sure that we are setting everybody up for success. Number one, gaining control of your personal finances, number one. And number two is allowing you to know of other alternative ways that you can make money online or outside, away from your 9-to-5 job. Because if your 9-to-5 job is currently the only way that you're producing income, it's equivalent to you putting all your eggs in one basket and betting on a stock. Because the moment that you're unable to work, and God forbid you don't have disability or something like that, how are you going to be able to provide for your family, right? And that's a very scary thought. So if you're in the process and you're healthy now and you're in your 9 to 5 in your job, there should be nothing stopping you from figuring out how to make other forms of income. 2020 is the best example of that. And so I don't want anybody here who's a part of this community to suffer from that. So that's why we wanted to come here and show you guys some ways you can take control, which is step one of your personal finance. Then we're going to show you alternative ways to create more income for yourself. Plenty of ways to create income online where you're at home as a side gig, side hustle. And then if you want to eventually make it your main thing and join the world of entrepreneurship. I am not a rapper. I'm not an athlete. I'm an entrepreneur. All right.
Hey.
So Beez, we're going to end off with a couple things from you. What are some tips that you would have somebody who's just starting out and say, man, I want to get serious about my credit? What are some tips that you can say, like 3 steps, the first 3 steps, because I want them to be actionable. I want them to do it now. 3 steps that they can do right now to take charge of their current financial situation.
Okay, so overall financial situation,
Yeah.
what I would say is, one, you want to address those elements of your credit mix, right? So you want to really focus on especially the first major 2, which is the amount owed, which is your utilization, and your payment history, right? So if you're going to do some sort of credit repair, get those late payments removed, right? Make sure you've been paying on time, and as it reflects that way as 100% on-time payments. Get your utilization down, right? And then focus on all of the other aspects of there. Next thing I would say on your journey to financial freedom is start with a savings account, right? You want to have a 6-month, not savings, an emergency fund, right? You want to have a 6-month to a year emergency fund, and that could be in the bank, right? Mm-hmm. The bank only gives you less than 1%, less than point something odd percent, right? So if the next step after that is a glorified savings account, and the way that you do that is invest into an index fund that tracks the S&P 500, because the S&P 500 is made up of all of those technology firms, right? So an index fund tracking the S&P 500, the S&P 500 is given returns of approximately 10 to 15% consistently, a year. So last year I got about 20% because the tech firms did even better, right? So every month, when you pay for Netflix, you pay for internet, you pay for this and that. Well, pay for your index fund. Just drop in some money. It don't gotta be a lot. Drop in $50. Drop in $100. Oh, you got a big bonus of $5,000 from work. Drop in 3,000 of that into there. Keep the 2,000 for something else, right? But make it a habit of putting money into that index fund, and you're gonna see it grow over time. Then after that, there's 3 major financial vehicles in this world, in this country, of creating wealth. One is building a business, and that's where I focus a lot on. That's why it's Business Builder Beez, right? 2 is the financial markets, Forex, the stock markets, things like that, right? The index fund is a safer part of the stock market, but now you could get into the individual stocks and such like that. And then 3 is real estate. Those are you want to at least get into one of those 3 to get started, and then afterwards get into all 3. And
Gotcha.
that'll get you on the right path for creating your financial freedom.
Awesome, man. I appreciate that. And I know you did a bunch of other things for the community, man. And, we're going to, we already showed them that in the beginning of the clip. We'll have that playing. We had that played earlier, but like you did some great things. I think it was the Walmart, at the Walmart down in your area. Just really quickly touch upon that. I know that, giving back is one of the things that you do and you pride yourself on. So talk a little bit about that real quick.
Yeah, that's something that's important to me, man, especially when it comes to kids. And, one thing that I always say is that money doesn't flow to you, it flows through you, right? So, people think like, I'm making money. Well, now I'm trying to like distribute money too, you know what I'm saying? So helping and giving to others is important. And what we did is we partnered with a charity called Kids in Distress. And then, it was a difficult time. They normally get donations for gifts for the kids in the holiday season from tons of people, but they couldn't have all those tons of people coming at this time, right?
Yeah.
Because of COVID. So what we did is a group of entrepreneurs, my fellow entrepreneurs, we got together. I coordinated everything. We went and bought out an entire Walmart, all the toys and stuff, everything for kids, and
That's
then
boss.
put it on one of our partners' 18-wheeler trucks, drove it over to kids in distress, and then
Gee.
offloaded it there. And it was an amazing experience, man. And just to have to have that sort of impact on the kids, that meant everything. And we plan on continuing doing things like that this year and beyond.
Bro, I love it. I love it, man. And so the last thing I want to touch on is I know we mentioned that you are currently, and I know we're partnering on this at the same time as we speak. For these guys who don't know, is Business Builders Academy is literally in the making, and actually you have some camera guys. You guys are going to be going to work to it on it tomorrow. Tell us a little bit about that, because again, for those guys who don't know, we know that financial education is one of the things that are lacking in this country, which is why we have $14.1 trillion in debt, with the average person at $90,000+ that's literally a negative sign in front of that to their name. And so one of the things that we're doing to try to fix that is literally building an academy. And Beez came up with this wonderful idea to build this. And so we just teamed up, and trying to create a powerhouse situation. So Beez, tell us a little bit about that and what your plans are for that, man.
Yeah. So we've already launched the precursor to the academy, and it's called the Business Builder Roundtable, right?
Sir.
So one of the things I always preach to people is that you got to buy seats at different tables and network with people, but you also got to build up your own table, and you grow with like-minded people and surround yourself with good people that's helping you, pulling you up, right? So the roundtable, we discuss all type of strategies, right? It's just I'm one of the mentors. I bring in other mentors at times, and we discuss all types of strategies, some of the business plays that I'm doing, ways to fix credit, ways to focus on business credit, how to get funded, all types of stuff that we talk about. But then when we get to the academy, it's more of a structured step-by-step approach, right? So some people are going to be like, oh, in the roundtable, which is a monthly subscription, they're just going to come in, they're going to get all these gems, they're going to get all this advice, they're going to build up with people, network with people, and then they can execute on their own, right? But then some others want, hey, I really need to go step by step. And since I can't go step by step with everyone individually, that's why the Business Builder Academy was, conceived. And then we said, okay, we'll give you a foundations, which is your freshman level. Then we'll move you into sophomore, junior, and senior or master level. And, it's a step-by-step approach to building your businesses, getting them funded, which is a common problem with, budding entrepreneurs. Is where do I get the money from? Structuring it right so that it's properly set for further funding in the future, structuring it right so that your processes are in place, your systems are automating it, and then people are then hired to help elevate you out of the process. And how do you then manage multiple businesses at the same time? So that's the concept that we're trying to focus on in the Business Builder Academy. And it's going to be amazing, man. We're trying to uplift everybody this year.
Guys, the plan is to take someone who knows absolutely nothing about business or who's a beginner. We're taking anybody who's intermediate or even advanced and want to make more advanced moves. There's always room for that. And that's why the academy that Beez was saying is made for, right? So if you want to come in and say, I don't know much about it, don't worry. This academy has you covered. He's literally going to show you exactly what it takes to build business credit from the bottom up. If you don't have your business credit together yet, don't worry. We're going to be talking about personal credit first too. So that way you can get your personal credit, situated. If you need a fix and you need to do credit repair, whether you have bankruptcies, doesn't matter. All of that is included and encompassed in the course to help you to succeed. And again, we have that model that he mentioned about the academy to take you through step by step, level by level, to make sure you're not skipping anything that's necessary in order for you to graduate successfully and hopefully to help another person by paying it forward. So we're all about that, man. Yo, I appreciate you, Beez, as always. I don't want to take up too much of your time, bro. I know you busy. You got the McLaren, everything sitting outside, bro. I understand, business is awaiting you, but I do appreciate your time 100%, man. Literally, as always, every time we get on the phone and chat, I really do appreciate your time. Any last words for the folks, man?
Oh, man, listen, just take your finances seriously. Every morning, back in the day, every morning I woke up and the first thing I did is I look on my phone on Instagram or on Facebook, right?
Yeah.
Now, every morning I wake up the first thing I'm checking is I'll check my Credit Karma. I'll check my FICO. I go into my Experian app. I have a whole finance folder with every bank account that I got. I go into every bank account. I see, is there a new something else that changed, a charge that I don't know about? What's this? Whatever. Know your finances. Don't ignore it. Don't let it slip, because then it's going to cause more problems for you in the end.
I appreciate that, man. I know everybody else does too. Guys, question for you guys. Have you already logged into fico.com, myfico.com? Have you already been starting taking chances on like literally keeping track of all your personal finances? If so, what are your favorite apps that you're using? Let me know down below. Don't forget to hit the like button. Don't forget to smash the subscribe button, because we do know that this helps this video and the algorithm to push this out to everybody who needs to hear it. And again, you heard it here first on Freedom Nation with my man Beez. Beez, where can they find you in the best place if somebody want to get in contact with you about their business credit?
For sure. Instagram is my main home. So hit me up at Business Builder Beez on Instagram, and that's Beez. You can also check out one of my companies is Capital Beez, and it's Capital Beez Finance on Instagram.
Awesome, man. Well, I put it down there in the handle, so you guys check it out. Again, thank you so much for tuning in for Freedom Nation, guys. We'll see you on the next video. As always, peace and love.